Hi everyone, in this video I'm going to do a brief review of eBay's third quarter earnings results and answer if the stock is a buy after these results. So let's get right into it. So eBay is reeling from the economic reopening. Of course, it's an online e-commerce auction and purchasing website. And so when brick and mortar stores were locked down and we had fewer places to spend our money, eBay benefited tremendously. And now it's experiencing the flip side of that as consumers are going out, spending more money on away from home activities like restaurants, theme parks, concerts, etc. Overall revenue for eBay decreased by 5% in the third quarter to 2.4 billion. Adjusted earnings per share of a dollar was 10% higher than the same quarter last year. Gross merchandise volume, which is the total transaction dollars on the website of 17.7 billion, was down 11% year over year. Of course, this is significant because remember, eBay does not own any of the inventory sold on its platform. It merely brings together buyers and sellers and takes a percentage from each transaction that takes place. It also doesn't handle fulfillment, shipping, and handling, right? It leaves that to buyers and sellers as well. So eBay just focuses on bringing buyers and sellers together, taking a fee, a transaction fee from each transaction. So it counts on this gross merchandise volume. So the fact that it was down double digits is not great news for investors, but it was to be expected because it needs to come down. It needs to revert to normal levels after surging during the pandemic, right? During the earlier stages of the pandemic. Cash flow from operations increased to 735 million, up from 661 million in the same quarter last year. And this also is a good place to point out eBay's business model is an asset light business model and it's conducive to cash flows. It doesn't need to invest in expensive warehouses and logistics and all of that as revenue grows, as transaction volumes grow. And so each incremental customer and each incremental sale just adds to the cash flow, adds to the bottom line of the business. And this is a characteristic that I like considerably. I like these types of asset light business models that don't take on these risky, massive capital investment projects, compared to, let's say, Amazon, who spent nearly over $100 billion in capital investments in the last 2 years. That's a lot of money that it needs to keep spending. As revenue grows, it needs to just keep spending, and it investors are left thinking, when are we going to reap the benefits of this revenue growth, or are you just always going to plow back these cash flows back into the business, and investors are never going to see this. It's the opposite with eBay. As revenue grows, as revenue comes in, that just flows to the bottom line, flows to cash flows, and investors get to see the benefits of that almost immediately. Active buyers decreased by 3 million from the previous quarter to 135 million, and this was down larger if you look at it year over year from 152 million. So they're down lots of users quarter over quarter and year over year. I will highlight also, in addition to the reopening headwinds where customers are spending more money away from home on away from home activities, management is also taking steps that could be hurting user growth. Number one, they stopped sending out promotional offers or significantly reduced the amount of promotional offers they send out. They used to send out these coupons of 20% off your purchase of $100 or more, or $15 off your purchase of $75 or more. As an eBay customer, I used to get those, and I haven't gotten one of those in a long time. I can't remember the last time I got one of those. And so that, of course, if you're getting less promotions, you're not going to be spending as much money on eBay. That's one thing management has done. Another thing management has done that could be decreasing transactions and customer growth is that they are increasing the transaction take rate. They're taking more revenue off of each sale. They increased the fees that they collect from each sale considerably. Used to be like around 8 or 9%. Now that's up to around 11, 12, 13%. And so they've increased those fees, and that could be hurting customer growth as well. So this is intentional policies that are aimed at reducing expenses and increasing profitability, but at the same time, it could be impacting user growth. And management said as much. They said, you know what, we're focused on profitable growth. We don't want to have these marginal customers that are not really benefiting to our profits and cash flows, and they're only coming to eBay when we send them a promotion. If we don't send them a promote, they're not coming to spend money on eBay. And so eBay said, you know what, we don't want those kinds of customers. Let them go somewhere else. We want the kind of customers that are going to shop regardless if we send them a promotion or not. Another initiative management is undertaking is implementing more advertising spots, more advertising opportunities, and this ad revenue jumped by 19% to 249 million. It's becoming a meaningful part of eBay's business, and with over 135 million active buyers, this you could see this jump considerably more. There could be room to go because there's all of these customers that are coming onto eBay with a purchase intention, with an intention to buy something. And of course, advertisers would like to gain access to those buyers and try to persuade them to buy from them instead of buying from someone else. And finally, eBay repurchased $300 million of its own stock in the quarter. This is typically a signal of management saying that they think their stock is undervalued. And in this case, I would agree with management. eBay's stock is trading relatively inexpensively at a forward price to earnings ratio of less than 10, a little under 10. And so the stock is relatively cheap here. And that is one of the reasons why, to answer the question I posed in the beginning of this video, if eBay stock is a buy after these earnings results, I would say yes it is. I would say yes it is. eBay stock is a buy after these earnings results. I like the company's asset-light business model. I like the fact that it doesn't take on these massive capital investment projects. It takes a hands-off approach from shipping and handling, which is wastefully expensive, in my opinion, wastefully expensive. And so I would recommend investors with a long-term approach. eBay stock could be a good investment. So yes, eBay stock is a buy. All right, so that's all I've got for this video on eBay's earnings update. If you've gained some value from this video, please go ahead and hit the like and subscribe button. It'll help me make more videos like this one. Thank you for watching, and I'll see you next time. I want to thank the Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for all investors of all skill sets and risk levels. So I'm proud to partner with the Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by more than 3 times. Go to fool.com/parkev to get your 10 stock picks now.